Welcome to JLL Market Highlights for Q1 2018. So main highlights for the economy for Q1 2018. According to the General Statistics Office, GDP growth in Q1 for 2018 is estimated at 7.38%. That compares to the same period in 2017, the highest on record for the past decade. As of Q1 2018, retail sales of consumer goods and services witnessed an upturn of nearly 10% year on year, higher than the 9.2% level in the previous year. In the January to March period, foreign investment capital poured more than $5.8 billion into Vietnam. This was lower than the 2017 period. 76 countries and territories are now investing in Vietnam. South Korea was the leading investor with more than $1.8 billion US dollars, reaching over 30% of the FDI. This is followed by Hong Kong at 690 million and Singapore at 650 million.
Thank you, Stephen. I am Giang and Head of Market for JL Vietnam and would like to give you an update about retail and office in Ho Chi Minh City and Hanoi. For Ho Chi Minh City office market in Q1 2019, after the opening of Saigon Center Phase 2 and Deutsche House in the second half of 2017, we haven't seen the new Grade A building enter to the market yet. ETown Central started its operations within the quarter, adding the 34,000 square meter of Grade B office space into the total stock in Ho Chi Minh City. For Hanoi office market in Q1 2019, the market welcomed one new Grade B building, Euro Window Office building, adding more than 12,000 square meter office space to Hanoi total stock office market. Hoàng Kim District accounted for the largest amount of the overall office stock, followed by Dong Da District. That's an overall about the office supply in both city, Ho Chi Minh and Hanoi. We have seen the net absorption for both cities quite similar figures. Basically in Grade A and Grade B was totally more than 27,000 square meter. However, we see the Grade B segment saw the major absorption for the market. Due to the high occupancy rate in most of the office buildings in all grades A and B and C in both cities, Ho Chi Minh and Hanoi, and also the healthy demand from the market and limited supply, especially for 2019. Therefore, we have been seeing the rent has been increasing in Q1 2019 and throughout the year. The market continued to see moderate increase in average gross rent across the office sector, especially Grade A and Grade B buildings moderately increased 1% quarter-on-quarter and 1.6% year-on-year respectively. We have been seeing the inquiries for the new setup is likely to increase, while relocation and also expansion will continuously drive the market demand for this year. Moving on to the retail sector, the quarter saw the opening of a Grade A shopping center in District 10. It's called Vang Han Mall, with a totally retail space of 50,000 square meter entered to the submarket, and with the withdrawing of 26,000 square meter from the Paxson Flemington department store, convert from the retail space to another functions. As of Q1 2019, there were more than 1,800 active convenience stores and mini-malls with a total area of approximately 270,000 square meters citywide, up to 1.5% increase quarter-on-quarter. That's what the supply for the retail in Ho Chi Minh City Q1 2018. How about Hanoi market? There was no new completion in Q1 2019, keeping the total stock unchanged compared to the previous quarter at more than 971,000 square meter, up nearly 3% compared to the same period of 2017. Similar to office sector, we have been seeing the healthy demand in the retail sector. The overall vacancy rate dropped from 16.5% to 9.3% in the quarter, as the result of improving leasing activity and also rising purchasing power of the city households. The retail rent in the overall market was around $47 per square meter per month. That's for Ho Chi Minh City, where we see in the overall market rent for Hanoi market a little bit lower, around 28.5 USD per square meter per month. If we see the growth in Ho Chi Minh City around 1.1%, then in Hanoi a little bit lower, but it's not much. It's around 0.7% compared to the same period of 2017. The CBD submarket witnessed advance in rents as a good performance continued the multiple tenants with a strong focus on the F&B, fashions, health and entertainment retail subcategories. For the future supply of the retail sector in the next quarter, nearly 50,000 square meter retail space is expected to be completed in Ho Chi Minh City, accounting for nearly 25% of the total supply in 2019, where we see Hanoi is more than 30,000 square meter retail space is expected to complete this year, accounting for approximately 10% of the total future supply in 2019. For both cities, we have been seeing that most of the future supply this year are non-CBD location. Demand from the F&B, lifestyle, entertainment sector remains mainly active and we focus on the good retail developments moving forward. The occupancy rate and the rental growth is forecast to move upward over the remaining quarters of 2019, mainly due to stronger leasing demand of the market. That's where the retail rental trend in Ho Chi Minh City in Q1 2019. How about Hanoi? Hanoi, we also see the slight increase in rent is expected in coming quarters, yet at a moderate level only because the new supply is trying to compete the leasing strategy and also low in the rental rate at the new development.
Thank you, Trang Bui. I'm Stephen Higgins and welcome to the Industrial Overview for North Vietnam. The industrial land supply in North Vietnam was recorded at 11,360 hectares at the end of Q1 2018. This is nearly half of the South Vietnam and saw an increase of 1,100 hectares in the last 6 months, or 10%. Haiphong and Bac Ninh contributed to 46% of this total overall stock. These two areas are becoming more attractive for occupiers due to significant infrastructure projects, including the seaport development and freeway expansions. Moving on to demand, the average occupancy rate was 81% as at Q1 2018. This was an increase of 9% compared over the last 6 months. Most of the absorption was in Hanoi, Bac Ninh and Hưng Yên provinces. Bac Ninh and Haiphong are recognised as the most favourable locations for industrial development among North Vietnam provinces. This is thanks to synchronised infrastructure development, good accessibility to skilled workforce, and improved FDI policies from the government. The demand for warehouses and ready-built factories has also increased recently within these areas. Looking at land rents, in general, the average land rent has increased in North Vietnam. The current average is USD $76.6 per square metre on a typical 50-year term. The best performer was Hanoi, which is recorded at $121 per square metre, which saw a 6% increase over the past 6 months. Moving on to outlook, we anticipate approximately 18,100 hectares of industrial land to launch in North Vietnam until 2020. This is mainly in provinces of Haiphong, Quang Ninh and Vinh Phuc. Occupancy levels in both industrial land and warehouse and ready-built factory products seems to be on a fine trajectory. This is due to growing FDI in the manufacturing segment and the government efforts to stimulate the business environment.
Thanks, Stephen, for your update. I'm Trang Le. I give you the update on the residential market. For Ho Chi Minh City, in the first quarter of the year, the new launch totaled nearly 14,000 units, down 10% Q-on-Q, but up nearly 60% compared to the same period last year. Notably, a number of projects already held the soft launch in the previous quarter. Of that, mid-end segment account for more than 60% of the total launch. For villa and townhouse segment, new supply reached more than 1,500 units, down 60% Q-on-Q, but up nearly 13% year-on-year, with the majority of the activity coming from District 9, District 8, Thủ Đức and Bình Chánh districts. For apartment demand, in line with strong new launch, the sale reached nearly 16,000 units, up 90% year-on-year. This is thanks to the aggressive marketing strategy of the developer with soft launch events and strong market momentum. With regard to selling price, apartment selling price were higher on quarterly basis with popular growth by project record at 1 to 2% Q-on-Q. For villa and townhouse, price keep increasing in line with the continued good demand from both owner-occupiers and investors. Moving to Hanoi market, approximately 9,000 units were newly launched in the first quarter of the year. This number is down 5.3 Q-on-Q. Of the total, nearly 67% coming from Hoàng Mai, Thanh Xuân, Nam Từ Liêm, and Hà Đông district. Price quote for the new launch monthly range from $1,000 to $1,500 per square meter, accounting for 47% of the total. Nearly 10,600 units were sold in the first quarter of the year in the primary market, an increase of 7.7 Q-on-Q and 29.7 year-on-year. The sale rate of total unit available improved from 3.5 basic points from 31.5% in the previous quarter. With regard to selling price, the average market selling price stood at $1,300 per square meter. This number was down by 3.9% Q-on-Q, resulting mostly from the extension of low price segment in the quarter. Under registering a decrease on a non-chain-link basis, a slight increase in chain-link price was seen in many projects across the world at around 1% Q-on-Q. For both Hanoi and Ho Chi Minh City, we expect the market will welcome a wave of project completion by the end of this year. Of that, the low price segment will lift the market. Affordable and mid-end apartment will continue to attract buyers, especially young families. Thank you for listening. Should you have any questions, please feel free to contact us.